Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of the confusing world of corporate finance. And let's just say our guest today, Churchill Downs, might have a few aces up its sleeve, or maybe it's just shuffling the deck before we dive into today's filing, which is all about a new acquisition. Let's just say it's a move that could change the game for them. And if you're into understanding how these big companies make big moves, make sure you're subscribed and join our Discord community link down below, because we break down these filings so you don't have to. Alright, so Churchill Downs Incorporated, or CDI as they're also known, has just announced something pretty significant. They completed a big purchase and it's a pretty substantial cash deal. So what's the big deal here? They've gone and bought a majority stake, 90% to be exact, in a company that runs a casino in Salem, New Hampshire. Now this isn't just pocket change, they spent a cool $180 million to make this happen. Plus there are some adjustments that could tweak that final price a bit. Now they put out a press release about this, and usually these are dressed up in corporate speak. But what this really means is CDI is expanding its casino footprint. Think of it like a horse racing company saying, hey, let's get into more gambling territory. This move clearly shows they're not just sticking to the racetrack, they're looking for growth in other areas of the entertainment and gambling industry. This is about diversification and reaching new customers in new places. The company's common stock trades under the ticker symbol CHDN on the Nasdaq Global Select Market. This expansion is a big strategic play, and investors are definitely watching closely to see how this acquisition impacts their overall financials and market position. Now, looking beyond just this one acquisition, Churchill Downs is known for its iconic horse racing operations, including the Kentucky Derby, but this move into casinos shows a broader strategy to grow beyond just the sport itself. They're aiming to bring in more revenue streams and cater to different types of entertainment seekers. This diversification can be a smart move to hedge against any downturns in the horse racing industry and capture a larger share of the overall gambling market. So what do we think about this move? Well, on the surface it looks like a solid expansionary step. CDI is putting a significant amount of cash on the table to acquire a new asset and grow its businesses. The focus on increasing their casino presence alongside their racing operations suggests a strategy to become a more comprehensive entertainment and gaming company. This kind of bold move can be a real strength when executed well, potentially leading to increased revenue and profitability. However, with any acquisition, especially one of this size, there are always risks. Integrating a new business can be challenging, and there's always the question of whether the acquired asset will perform as expected. The success of this move will really depend on how well Churchill Downs can manage and grow this new casino operation, and if it truly fits into their long-term vision. We'll be keeping a close eye on their future reports to see the impact of this $180 million bet. Alright, that's our decode of Churchill Downs' latest move. What's your take on this acquisition? Are they onto a winner, or is this a risky bet? Let us know your thoughts in the comments below. If you found this breakdown helpful, give us a thumbs up. And if you want more straight talking corporate analysis, make sure to subscribe. Also, don't forget to join our Discord community linked in the description for even more insights. Thanks for watching, and we'll see you in the next one.